Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, March 17th, 2023. It's now the 16th at 8:13 p.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 has had the price flip to the sequential and combo sell setup one count. And to negate that for end of day on the 17th, there must be a close below 3855.76 for the price flip to the buy setup count one. If price had a little more oomph to the upside and was able to close above the 50% and 100% disqualified momentum up today on the 16th, that would have been qualified. So for end of day on the 17th, a close below the trend factor disqualified down 3 will become qualified. Price did manage to close above the cloud conversion line, and price for the S&P 500 at 8:22 p.m. Central Time on the 16th is 39.57. Above that is the cloud baseline, the channel 3 high, and relative retracement disqualified up 1 should be resistance. Irrational exuberance pushes S&P price through all these levels and gets to these ongoing supply lines, and this supply line would need to have an open above the level for the 17th is 4022.20. So an open above that and a close above it would qualify that one, and a close above this one would qualify that supply line, which is at 4061.68 for today, the 17th. And to the downside, qualify this trend factor down 3 and keep going. Both of these ongoing demand lines would become qualified with closes under their levels, which for today is at 3802.99 for this one right here, the bottom one, and the top one is at 3811.12 for the 17th. And I have the 4, 5, and 6 megaphone settings on, and the megaphone 5 has printed here, so there should be a megaphone 6 printed when it gets above this high here, so higher than that high, megaphone 6, and then eventually megaphone 7 will print after that with a low below this low on the 13th and a tick higher than this high on the 6th, and the D wave, down wave 4 and D wave, up wave 1 will print along with the megaphone 6. The NDXT equal weighted big fat cap mega tech technology index had a nice candle upwards today, and there are some good things happening in the banking sector, like other big huge mega banks helping out the little banks, and Credit Suisse is going to get some help from the Swiss Fed Bank. They don't deserve it, just like Silicon Valley Bank didn't deserve it. But nonetheless, that is definitely turning the great eye of Sauron over to technology. Now it has to get up to this relative retracement 0.382 in DeMark. That's also the 50% target, which gets hit 88% of the time. That was already hit. So now it needs to get back up to that and qualify and confirm that DeMark relative retracement level, and then start heading up. And definitely resistance here at this purple line, but get past that. And here's the 100% target that gets hit 73% of the time. The best thing that the NDXT has going for it is it did not have the throwback to the exit point right here. It stumbled a little bit out of the gate here. You can see that after it broke out 2 candles later, it did test the exit point, but it would have needed to do it from over here in this area and then come back down and test that area near the exit point. So the thing about that is that it won't hurt the performance of this diamond breakout pattern where it broke out of here. So let's see what happens at the relative retracement 0.382. The NASDAQ 100 NDXHILO chart that has the EMA 5, EMA 10, and EMA 21 has given about the most beautiful buy signal that you could ask for. The 5 EMA went above its red 10 EMA today, and the ROC 12 is right at 0. So that's a buy signal. It's happening after a shallow downdraft, so I don't expect this to skyrocket past all of these high peaks here. I still believe the trend of lower highs here will stay intact, but nonetheless, I think this is going to be a nice rally for a little while. You can see the short-term KST just crossed above 0 after crossing above its signal line below 0. And the intermediate term KST looks like it wants to hook around right at 0 and head back up. It needs to get above its signal line, which is racing down to meet it. And then the long-term KST was going up and to the right, up in the nosebleed section, so it's hooked around a little and headed down towards its signal line that's racing up to meet it. So if the long-term KST rolls over and goes under its signal line, and the short and intermediate term KSTs roll to the upside like this, then we should have a nice short-term rally, but in the long term it will fail eventually, as the long-term trend will be down when this gets under its signal line there. So take advantage and enjoy this ride for a little while. You could wait for a small pullback, but it just doesn't look like that's going to happen, as the value play has really hit the skids, with the financials hitting the skids. The CBOE total put call ratio charts KST of the put call ratio is headed down nicely here, and S&P price is headed up nicely here. I just don't think it will be as strong a rally because it didn't get above this line, and especially this one. You can see how powerful the rallies can become from higher levels. Here's the October run-up. This is the previous one that worked, at that level. It did get above that blue line here and headed down for a nice rally in the S&P 500. Here's one that's more realistic over here. It did not make it to the horizontal blue line there. Rolled over and went down. Had a pretty nice run up. And then ran into trouble here before this blue line here. You can see the downdraft and a little bit of volatility there. So maybe something similar to that is in store here. Not really make it down to this other blue line down here. The S&P 500 support and resistance levels big board chart shows the gray areas at the monthly 12 simple moving average, 21 EMA, and 100 EMA. And price in the pre-market hours for the S&P 500 at 9:21 p.m. Central Time on the 16th is 39.59. So this is similar to yesterday, where I gave all price levels in the 3,800 zone a red, green, or gray label. So did the same thing today in the 3,900 zone. So to the downside is the weekly Bollinger Band mid-band 39 period, the daily conversion line, the downtrend line from 01/04/2022, the Fortress Fed resistance, and the pivot point. And to the upside is the baseline 26 bars back concerning the lagging line, the relative retracement up 1, the bottom of the cloud, the 50 EMA, the 20 simple moving average, daily high channel 3, the daily baseline, and R1. And the ROC 1 closed above its positive volatility line, which is at positive 1.00, closed at 1.76. Look at the ATR2, 92.10, and pointed up, and that's above its pain threshold. But this is the kind of pain we like when there's positive volatility to the upside. So that was some huge bars here for the last 2 days. However, the PPO extreme is still under 0, negative 0.86. And the S&P 500 daily AD line is under its 21 EMA signal line. However, the NASDAQ 100 daily AD line is above its 21 EMA signal line by 1 point. I'll take it. And the New York traditional McClellan breath oscillator to get back to 0 would require 2,414 advancers over decliners to get back to 0. So that's digging itself out of the hole here. That was some quite large levels. It was down in the 5,000 something a couple days ago, so it's made great strides to the upside. Still below 0 though. Have a great day.